Welcome back to the channel. Sorry, to the market. Hey, a lot of pain in the market today. What up, Hassan? How you guys doing? We're gonna do some Q&A. Let's do a review on what we got going on here. Right, S&P. Is it time to short? Right, is it time to get short the market? Is it time to give up on the long? Is it time to switch positions? Right, this is the 4-hour chart. It looks pretty bearish, right? We couldn't even make it to the top of the channel. Couldn't even make it to the top of the channel. Now we're selling back off, right? The moving averages are showing a death cross. The 50 is crossing above the 100, and they're expanding, right? It doesn't look good. We got on the 4-hour chart, we got resistance again. We saw resistance against the 200 moving average, right? Move to the daily chart. This is S&P. We filled that gap, by the way. We filled that gap up here. I mean, we got about 90%. We didn't fill it all the way, but we did fill the gap, and we pretty much reversed lower. That gap was at 438.50. We got to about 438.20, and we sold off. And that's S&P 500, 438.20. Yeah, that was about right. Back to the bottom of the trend, right? Now, on the daily chart, it does. Let's take this out. Look, we failed. We're now breaking the bull market trend. The bull market trend is being violated. Okay, it's just reality. It's being violated. Our last support for the S&P to continue in the bull trend is the 200 daily moving average, and I think in after hours we just slipped below it. Let me see really quick. Let's check really quick. After hours, turn this pre-market on. I think we slipped below it, right? So it looks pretty bad. Yeah, that's our after hours. I mean, it's kind of hard to see, but this was the daily price action. We closed somewhere around 421. Now it's starting to fall. Doesn't look great, right? Doesn't look great. We took out the daily low on top of pulling into the 200 moving average. Okay, so back to the daily chart. I mean, we have to support this area. We got some capitulation earlier in the month, right? And we actually pulled it off. We moved higher. So what is the backdrop? And what we're going to dive into is all the macro indicators, the macro forces, right? What is the economy looking like? What does it give? What is the engine to growth looking like? Is the engine strong? Is it accelerating? Is it idle? Is it frozen? Right? What is inflation looking like? What are how do you align that with the technicals? What are the fundamentals to earnings season going forward? What do the fundamentals look like? Right? The geopolitics, we know that's the big the big stick in the gear, geopolitics. Okay, is the war going to escalate? Does it even matter? We're spending on defense to support Israel and Ukraine, so yields are going higher because like, oh, okay, you're going to keep spending, yields go higher. Nope, the bond market cannot catch a bid, and so yields go up. And when the market struggles, valuations come down when yields are up like that, right? So that's what we're facing here. And let's go ahead. And then we're going to look forward. Look, the main point here is we're going to look into the future, right? The next 2 weeks, I think, are the most vital, most crucial weeks when it comes to the data. Whether we roll into a bear market, right? The bull market is over from October lows of 2022, or whether we maintain the ride, whether we keep moving strong. Okay, so that daily moving average, that's where we're at. What's the last support here? And we want to stay above that. We want to stay above that level. If we move over to the Qs, okay, NASDAQ has been stronger. NASDAQ's still a little strong. Could come down to the bottom of this channel, this big flag channel, but it also looks weak. The NASDAQ is also looking pretty weak, and that's going to come down to the MAG 7. We already know Tesla barfed, but I think Tesla might be capitulating here. Right? Is it overblown? Is it time to, get long Tesla stock? Is it time? Maybe it has one more move down. So anyways, let's go ahead and start with what we're seeing in the macro. Okay, let's start with the macro. First off, let's start with the dollar. Okay, we know the dollar's the big headwind here. The dollar's always a big headwind. Remove, I don't care. Kick, remove, kick. I don't want that. Get off my stream. Okay, so anyways, here's the dollar, right? We got the dollar. It is wedging. The dollar is wedging. Now, interestingly enough, the dollar should actually be very bullish in this environment because rates are up. Rates move the dollar higher. Higher rates, higher dollar. You're going to benefit more off the dollar. If the dollar goes up, then the gold trade is maybe over, right? Right now, the dollar is just staying where it's at. Gold is moving up, right? Those two are inversely correlated. Gold, so if you're a Forex trader, gold is moving up against the dollar at the moment. If the war accelerates, though, I don't know, because the dollar, there might be a big move into dollars. We'll see. I don't know if that's the best trade. Oil is moving up. Despite Venezuela being, the easing of sanctions on Venezuela oil, which means they're going to come back online. They're doing 700,000 barrels a day. They used to do 3 million. If they get back to 3 million, which isn't going to be anytime soon because their infrastructure sucks. But hey, that's more oil. That's more supply. The U.S. is pumping pretty hard. Iran's pumping pretty hard. And who else is pumping hard? U.S. is pumping hard. You also have, easing. Well, we might have to ease sanctions on Russia. This plays right into Russia's hand, right? So oil, but if oil keeps tightening, that's going to be tough. The stock market might not care here. Why? Because S&P earnings on the energy side is going to be higher, right? But this does slow the economy. So where is the economy at? Where is the actual economy at? Okay, so anyways, you got the dollar, maybe making a move here, but it is above the 106, 105.50 level. That's a key level of support / resistance. We got above that. We supported it. So really, we got to assume that the dollar continues to move higher. That's the assumption here, unless the war, unless conditions ease a little bit. So that's what we're looking forward to when it comes to the US dollar. Now, the real risk to the market here is yields. They never topped. Yields continue to climb. 30-year yields putting pressure on the mortgage market, still moving up. So you need yields to really capitulate, and maybe yields don't need to fall all the way back down to zero, right? But they did hit 5%, and I think 5% is going to be, we're using the 10-year here, the 5% is going to be that big area of where you might get more demand come in because you're yielding 5%. You haven't had that for about 15 years. So you get 5%, yield on your 10-year treasuries. And hey, maybe people want to come in and buy this. Maybe US debt is more attractive at 5%. Or maybe the market is not going to the bond market isn't going to stop going up or pushing rates up until it matches the Fed funds rate at 5.25%. 5.25 to 5.5. Who knows? Maybe we go higher from here. But historically, stocks can still move up in a high rate environment, but not if the dollar's moving up at the same time, right? So that's the setup. The macro forces are against us, but we are in earnings season, so that's gonna be drastic. Now, are the commodities in general tightening? No, you actually have a loosening of conditions. Nat gas tried to break out, came right back down, right? So hey, inflation is not the issue, right? It's still elevated, but inflation is not making progress to the upside. Inflation is making progress to the bull side. Inflation is siding on the side, or siding on the bull side because it's coming down. The Fed has acknowledged that copper is still falling. You're not getting infrastructure inflation. Copper is what? The input to infrastructure costs. Those are coming down, right? Wheat still coming down, like wheat prices, food prices coming down. As far as commodities, you're not going to get this forward-looking, crazy inflation. It's not happening. We're not seeing that yet. Now, the VIX is above 20 and moving higher, so this is cautious. But where's it coming from? Is the VIX moving up because earnings are terrible, because the macro environment is terrible, because inflation is going up? No, VIX is going up simply because people are buying insurance against the war. That's why I think the S&P is closing lower, because going into the weekend, nobody wants to, hold a large position or be over positioned when, the war can accelerate. But keep in mind, right, you have a lot of wars that have happened in the past and the S&P's moved up. It really comes down to the oil prices. So, and, just to mark this on your calendar or put a note on this, the war accelerating is only terrible because look at the Ukrainian and Russian war, right? It started in February. Oil spiked. It came down. Stocks are still higher. The market came down because of inflation, not because oil spiked, not because the war raged on. It's because inflation was going higher, because inflation was terrible, and now that inflation rate is coming down. So pick your spots here. Pick your spots. You are making more progress on inflation here. Now, if the VIX spikes, obviously the S&P is going to struggle, We're going to get that struggle from the S&P. Here's another bad thing that we're seeing, or here's another, bearish, bond volatility is moving up. So this is not good. This is signaling that, liquidity conditions are not so good in the bond market, which kind of lends to the fact that, hey, maybe 10-year yields continue to climb. So that doesn't look good, right? But where's the support on the S&P? Where do we actually have support here? There's a huge gap, okay? There's a huge gap on the S&P 500 here at 422-ish, and we filled that gap. We're moving lower. We filled that gap. So your last line of defense is going to be the lows. And I think we should see a pop higher here coming into Monday or Tuesday, given that there is no, expectations of the war expanding, right? We're not seeing the war expand yet. Israel is going into Gaza in the north side, and you're going to see a lot of propaganda going forward. So the war is a big issue, but the market can see past the war as earnings come online, as the growth expectations pick up, and we're seeing the expectations for growth actually double from the last quarter. So there is no recession. We're not seeing a recession at all actually here, right? And tech stocks are probably due to benefit the most from this. All right, so RSI almost is pretty much, we're almost at oversold RSI for SPY, right? Where the Q's at? The Q's are headed there, right? So this is, we're going to bounce. The question is, do we sell off? And we had that sell off. We talked about this last time. Once you bounce, are we going to roll over? We did roll over. So now we're right back down to the lows, but we're headed into earnings season. And what are some other things we're looking at here? I think it's industrials, retail, all these are rolling over, SMH rolling over. So yeah, you got a lot of weakness, but it all comes down to earnings. And that's what we're going to look at here. We're going to take a look at what we see going forward, okay? Because this is going to be, no, not that. That's the wrong chart. We're not looking at that chart right here. Here we go. Right, so this is going to be key. This is really going to be key over the next couple weeks. Do we bounce? Do we move higher? Can I zoom into this? Yeah, there we go. So first, Microsoft. So October 24th. So next week we really get you get the Mag 7. You already have a Netflix and Tesla reported. Netflix did pretty good, right? Subscriber growth is doing pretty well. Their earnings are up, and that stock moved up. Tesla margins are down, not doing so well, and production might be worse going into the future. So far earnings season is not terrible though, because I think it's S&P 74% of S&P 500 companies are still beating expectations, right? So we have Microsoft Alphabet on the 24th, and that's going to be next Tuesday. That's going to be huge for the market. This is the most important data that we should be seeing here. Coca-Cola, I don't know. Visa is important because that's going to give us insight into how the consumer is spending, right? Do they continue to spend? What is the guidance going forward for the consumer? And then we get the GDP growth rate, and check this out. The consensus is at 4%, 4.1%. So almost double than where it was the last quarter in Q2, right? So growth is projected to go up. I think this is where the S&P might be selling off into a better than expected earnings season. It's a real good setup, just like we saw last time. It's a setup to move higher because prices, investors are like, okay, let's wait to see what earnings look like. Earnings are going to drive the S&P the most. We can still move higher in high earnings and high yield expectations in a higher inflation. I'm sorry, not high yield expectation, in a high rate environment. The Fed should be pausing, so it's constructive. Anyways, growth is due to be much higher, and is it priced in? I mean, the bears would say it is priced in. I don't know. Maybe we'll see that reaction on Wednesday. So you got big earnings on Tuesday. You have GDP, the growth rate of GDP on, and look, if it's this high in Q3, what is Q4 going to look like? Q4 might be stronger. We want to see that come in line. If it's too high, the Fed could hike rates. I doubt it, but the Fed might put that on the table and get a little more hawkish. Then Wednesday, and these are a lot of big numbers. You have Meta. What is Meta going to actually report? I'm sure they beat expectations. I think all these companies are set to beat expectations. I mean, Tesla missed because they started working on the factory for the Cybertruck and they couldn't produce as much, right? Amazon, I mean, they just had what, Cyber Monday? I don't know what it's called, but either way, Amazon's probably going to do pretty well. MasterCard, more insight on the consumer. Caterpillar, these stocks are going to do good because they are part of industrials, right? The industrial space where all this stimulus coming from the government is going, it's going to touch Caterpillar. It's going to touch these stocks that are building the infrastructure bill. We talked about this Caterpillar and the infrastructure bill. Let me see what Cat looks like. Oh, Caterpillar's dumping right now. This is a great setup. Caterpillar is dumping. It is down big. So, I mean, I think the market is setting up for a sell the news or sell the rumors and then buy the fact. I don't know if it's really sell the rumor. It's more like sell into earnings season. You know, the last when we headed into earnings season in the last quarter, stocks went up into earnings season, then sold off, and I think we see the reverse of that this time around. All right, then we get core inflation on Friday. Yeah, earnings this round are very important. We get core inflation on Friday, next Friday. This is going to be big. I'm focused on core, right? Consumer spending is probably going to be strong. Core PCE, where's that going to land? Okay, that's going to be huge because right now the only, look, inflation is coming from one segment, oil. That's it. Inflation is coming from oil. The market can price that in real time. Okay, in real time. So how does that come out in core? Transportation costs, are they up or down? And then you get big Apple earnings, right? Nvidia's later on down the road, but where's Apple at? That's going to be also a key indicator November 2nd. Well, actually, I'm sorry, I missed the Fed. The Fed interest rate decision is November 1st. So this is why this is big. You get earnings, you get where's the consumer at, you get core PCE, the Fed's preferred inflation gauge. They should be pausing here. I don't think the rate decision is going to matter as much as, what Powell says. We're of course we're going to be live for that. So what's going to be more important is how Powell communicates how the Fed is thinking about financial conditions going forward. Going forward, right? What is that going to look like? Do they realize, are they going to hike in December if they do pause here? Okay, Apple, obviously, that's going to pull the most earnings in the market. If we sell off into Apple earnings, I expect a reversal. Starbucks, that's a long way away too. Starbucks, how's the consumer looking? Are they still buying coffee? They're growing big in China, so Starbucks should do pretty well. And then you get the employment report on Friday, November 3rd, and you best bet the Fed already kind of knows those numbers, what they're going to look like. So if we do get a surprise rate hike, that'll be terrible for the market, right? That'll be terrible. But there is some optimism here. Why? Because economic activity is recovering. The consumer is still spending. We're still in a seasonally strong period of time. Employment is still strong, right? Despite what you hear or despite what people say, it's still tight. The Fed knows that. It's not trying to destroy employment. The Fed is not trying to destroy the business cycle. It's just trying to get inflation down. This is a fight against inflation, and they are winning the fight while employment remains strong, right? But the Fed is using expectations to warn the market, because if they do say, hey, this is our last rate hike, the market's going to boom and then financial conditions start to ease. So Powell is really using his words to keep conditions tight. Also, as long as the 10-year yield continues to tighten for the Fed, I mean, they don't need a hike. They really don't need a hike. Even if oil stays high, they don't need a hike. If oil remains high, they don't need a hike. If they do hike, dollars going higher, right? If they do hike, yields are going higher. But if they do pause, this could reignite the rally. Given, when you add earnings, I expect earnings to beat. I expect core inflation to make progress, right? So the market is kind of fighting all the positivity that could happen because it's uncertain about what's going forward with the war. Let's say nothing happens in the war, it doesn't escalate, it's just flat. I mean, the market should be bouncing at this area. We should be bouncing here. If something does break too, also retail, commercial real estate, well, the Fed should step in because liquidity conditions are still pretty tame. They're not moving higher, but they are pretty tame. Global liquidity, right? Global liquidity still kind of sucks, but China is stimulating. The Chinese economy is doing much better than expected from a lot of economists. So I mean, it feels weird, but I think we're straight. Now, Tesla, okay? What up, Sanoop Luke? Can you talk about the fear and greed index? Yeah, we can talk about the fear and greed index. Let's see if I can find one. Fear and greed. See if I can find the fear and greed index, the latest one. Is this for, what is this? Crypto fear. I think crypto is actually doing better than the stock market right now. So we'll pull up the fear and greed index, take a look at that. Make sure you guys throw in your questions, because again, this is just a review of what we're going to get going forward. I think we do bounce. We're oversold. We're due for a bounce. Just like last time we came into the 200 moving average, there are fund managers that need to be long Nvidia, Meta, Google, Tesla, probably to some degree. I don't know. For sure, Nvidia. They need to be long Microsoft. They need to be long certain stocks by the end of the year. So I think they're going to buy them. So I think the Qs are still going to outperform here, right? Now, the fear and greed index, right? This is market psychology. What does Warren Buffett say? When people are greedy, be fearful. When people are fearful, be greedy. We got to extreme fear for a while. And I don't even know if this is the actual index, the real index. This is what I found on Twitter. Typically it's pretty accurate. Let's see, when was this? 6 hours ago, Financial Juice breaking news. People are fearful, right? And I bet you this was worse. This was 6 hours ago. Now we're making new lows in the S&P. So market psychology, people start to sell their stocks, right? Investors are selling. They want to reposition. I saw Joe Terranova, CNBC analyst, got out of his QQQ position, right? Also, when fear is deep, right, the shorts, the people shorting the market, the people who are getting short the market, they're running into resistance for them, which is going to be support. So the more fearful you get, the closer you get to a capitulation to the upside. The more fear, the more fear, the more fear. Now, if there's a black swan, something breaks, then typically that fear goes extremely fearful. The market has a nasty rip to the downside, depending on what type of fear it is. If the dollar spikes, yes. But if it's a banking crisis, if it's a banking crisis that breaks, the market's going to anticipate that the Fed prints more money. What goes higher? Gold, Bitcoin, NASDAQ. The dollar comes back down. So it really depends what the fear is of, right? If the fear is that an escalation of war happens and oil goes higher, well, you're in trouble because inflation headline is going to go higher, right? And then the Fed has to also tighten more. So that's going to be nasty fear. That's not going to be good. But for the most part, the closer you get to extreme fear, the closer you want to also correlate this with an RSI oversold, right? You want to see an RSI oversold. The more you correlate that to an extremely oversold RSI, relative strength index, running into support, then the sellers run out of juice. The shorts are going to cover their positions, and people who are buying support are going to step in. Those fund managers who are not long S&P yet are going to come in. We're at the 200 daily moving average. So I think this is a key level. We should bounce here at this extreme fear. Crypto's a lot better, right? Crypto's looking a lot better. And that's for a good reason, because the Bitcoin ETF, JP Morgan said, or is saying, hey, we think we're going to get the ETF before January 10th. Morgan Stanley says we're going to get the Bitcoin ETF by the SEC before the year end, right? 2023. So a lot of people are believing that Gary Gensler is going to capitulate and start focusing on AI regulation. I mean, they already stopped, they're not going to counter Ripple. So, there's a lot of positivity there. But the fear and greed index, for the most part, is showing you we're getting closer to the lows. We're getting closer to bottoming. We're in a bottoming process here. We are in a bottoming process, especially with earnings going up, right? Actually, let's go to that. Let's take a look at what earnings are looking like right now. I think I posted this on my channel. Yeah, there we go. Here it is. Okay, so right now, 73% of S&P 500 companies have beaten EPS estimates to date for Q3. And that was Q3. That was what? July, August, September, July, August, September. we're going to spend more. We should see more consumer spending, more fiscal policy, right? In the fourth quarter. So I expect earnings, actually I think earnings bottomed out here. We're leaving an earnings season. So that fear and greed index, that should flip. We should start moving the other way as we get through earnings season. As the biggest catalyst, the Fed pauses. They're going to try to stay hawkish. We know that. But you want to see, okay, what did they say about 2024? Okay, what did they say about 2024? There's a lot of indicators that suggest economic growth is not going negative, that we're not going to see a recession. Okay, that those job numbers will continue. Yes, we'll lose some seasonality going into January, seasonal jobs for UPS, whoever it is, but more manufacturing jobs are coming into the market from onshoring, right? The White House mandates a lot of these policies call for onshoring of manufacturing. They're building rockets, they're building missiles, they're building weapons here in the US, in Arizona, right? Trickonomics, whatever you want to call it, doesn't matter. But they're building more. So yes, of course, a lot of jobs won't get filled for tech because there's not enough software engineers, but there is enough manufacturing jobs to get filled. So I don't see the employment numbers really taking a big hit anytime soon at all. We might not see a recession. The recession might have been in 2011. So that fear and greed index, you want to see it get really bad. That's when you start to flip. But you want to see the technicals also. So who's doing the best? Healthcare, information technology, consumer staples, which is consumer staples, Walmart so far. I mean, not everybody has, we're not all the way through earnings yet. So this is kind of a halfway picture. But also financials, right? The banks did really good. If the banks are doing well, then that's a good indicator of breadth overall. They're going to keep lending. They're in pretty good shape. Maybe some regionals are in trouble, but for the most part, they're in pretty good shape. So the S&P as a whole is, 73% of companies so far have reported positive earnings. The earnings recession is over, and we're going to keep up to date with FactSet. If you want to follow a good fundamental data source on Twitter, go follow FactSet. Okay, go follow FactSet. They're going to give you all your S&P stuff. Let's see, what did they got newly? A part of portfolios testing scenarios. We ran a couple of factor, blah, blah, blah. I just want to see earnings, the earnings picture going forward. We see EPS is starting to lift. So yeah, go follow them. So for the most part, anyways, back to the technicals, right? We're in a bottoming process, I believe, especially for Tesla. I know it seems like Tesla's going to get worse. It's going to get worse, but we're pulling into a very strong. Remember, we talked about this earlier in the year with Tesla, which was if they miss earnings, right? This wedge pattern that was forming. See, where was that wedge pattern? This wedge pattern that was forming, if they miss earnings, typically you get a nasty 9-10% downside move. It takes about 2 or 3 days, and then it bottoms out, and then it starts to price in the future. In the future, we're seeing that they're still ahead on supercharging network. Mercedes, Toyota is now using the network. They just need to find a reason to monetize that. You have Cybertruck, November 30th. That's going to be a catalyst for Tesla going forward. Look, it's oversold. Can it go further down? Sure. 207, probably the low. We're at 212 right now. I bought 2 contracts today. I expect some type of capitulation, at least back to 243, if the overall market can move up. Do you think Apple is going to beat expectations? So Apple, let's take a look at Apple technically. I think they do. Let's see what are we expecting for Apple? Let's pull up I'm going to look at the chart here and then pull up expectations. Pull up those Apple expectations. So Apple we're looking at EPS consensus is at $1.39. $1.39, okay? Revenue, $89 billion. So they're due to actually have less revenue than they did in the previous quarter. Now, this is a good setup for an upside beat. I think expectations for earnings are just too low, right? Do I know what Apple's going to do? No, because I'm not an Apple analyst in general. I don't know what they've been up to. They've been pretty quiet here. It looks like on a technical basis that you could see a trade right back down, right back down, make a new low with the S&P. and then start to move higher during earnings, right? I think we just seen this so many times in the last earnings. What happened? Here's your earnings right here, okay? We ran up into earnings season, and then basically the S&P, right? Stocks priced in better earnings and then sold off, right? Then sold off. This time we're pricing in well, I don't want to say we're pricing in worse earnings, but the earnings picture actually is better than it was in the previous quarter, and stocks are selling off. So I think, investors are just very cautious going forward into, earnings season. They're, because of the war, because yields are still rising, but yields should be at a peak here. So Apple, there's so many things going on here, right? And that's why we put up that you got earnings season, you have the Fed's decision, you have interest rates, you have the bond yields, you have the dollar. There's a lot of stuff shaking around here. That's why I say throw out your questions. In my view, I think technically you're oversold. The market is due for a bounce. On the macro level, right? As far as the economy, it's strong. So the economy supports earnings, right? Santa Claus rally as far as that. The macro forces are negative. The dollar is still above 105.50, although the dollar might be rolling over here, right? I don't know. I can't call anything now. It's just we want to see the dollar get below 105.50. Maybe during earnings we see the dollar move into stocks. I don't know. Also 10-year yields are moving high, but we could see that move erase. We could see 10-year yields actually, because if yields come down, Apple's going higher, Tesla's going higher, right? That's what's holding Tesla down is higher rates, higher yields. So if we do get a pause, which I think we do, the market is pricing in a 99% chance. Powell's probably going to try to be hawkish, but I don't think the market's going to believe it simply because the bond yields are doing the work for the Fed. So he doesn't really need to hike rates again. If that's the case, the market's going to start looking forward to, okay, that's the end of the rate hiking cycle, which we've been trying to guess forever. That's the end of the hiking cycle. Earnings were better than expected. So what does that do for PE? Earnings expansion. Earnings start to expand. And then what happens if yields come down because Powell is done hiking? Yields come down a little bit. Okay, so now your PE is way better. Valuations improve tremendously. And we get this big year-end rally to all-time highs. Might not start till November though. Okay, it might not start that's a good story. And also the war doesn't really accelerate. Energy doesn't. I mean, yes, oil's going higher, but look at nat gas. Nat gas is falling, so electricity costs are not necessarily going higher. Okay, shelter costs are falling. Rents are moving higher. The housing market is still frozen. So prices are kind of stuck for a single family, but rent prices are falling. Okay, so it's again, for every positive you have a negative, for every negative you have a positive. So that's why the fundamentals, or that's why the technicals are going to be so important here going forward. But yeah, nat gas is down. What is the single biggest factor right now? Okay, do you think would you like take on Tesla? I think Tesla's going to bounce here. I don't know if it continues higher, but my guess is I'm buying it now because we're oversold. Right? We're extremely oversold. Look at every single time. Let's just look at the history technically for Tesla. Okay, bounce, bounce. Okay, now let's look at 2023, not go back into, because we're not in the bear market no more, right? We're not in, inflation is rising. The Fed is hiking rates at a record level. The Fed is done. They're done. They're decelerating their hawkish stance. So I'm only going to look at 2023 and above for this RSI. This is a different market. This was a different market. This is when inflation rose. This is when the Fed started from 0 and came all the way. We're not at 0. We're at 5. So the path to rates is lower. I'm bullish on Tesla. The path to rates is lower or just sideways, right? Anyways, you get when the RSI sells off, right? When you get this this oversold signal, market bounces. Oversold signal, market bounces. Oversold signal, which we talked about in August when, shout out to my brother, had a new baby. What up, Elijah? I am now an uncle. Oversold. I remember this because it stuck in my head. I was like, hey, we're oversold. Let's get long. I got long, sold it to 240, and I got long again, and I held through earnings. I made a big mistake, but I have options out till January. I will roll them out further if I need to. So I make mistakes. Got FOMO a little bit into earnings. I thought, this will be the day. Nope, wrong. It was a stupid idea. I should have got out. Anyways, we're oversold again. So I think we bounce, and I think we bounce here. And this all depends on NASDAQ, right? Keep your eye on NASDAQ, keep your eye on earnings. So that's what I'm looking at for Tesla. Now, as far as the catalyst, Cybertruck, okay, November 30th, the stock should run up into earnings. I mean, earnings, it should run up into the Cybertruck launch. As soon as they release Cybertruck, it'll sell off. That's typically what Tesla does. It's buy the rumor, sell the fact. So that's what I'm going to ride. That's typically what we see here. That's not till November 30th. Okay. Now, on top of that, if the Fed does pause, one of Tesla's headwinds is interest rate expectations too high because, well, it's margins. If Elon keeps cutting prices, well, Elon is cutting prices, which hurts margins, which hurts growth to some degree and performance on earnings because of rate hikes. But if the rate hikes are done, then Tesla, the investors should say, okay, he's not going to cut prices. Let's go higher, right? Let's move higher. Let's bid up the stock here. You do have a lot of people interested. Out of the Mag 7, Tesla is the least held company from major institutions, and they are accumulating more and more shares for this year. Okay. The other positive, well, we know the negative: interest rate hikes, margins. Have they bottomed yet? We're going to get that signal, a little later on. And then the other one is the energy storage business. The energy storage, the margins are increasing. I think they're up 30%, 40% year over year. So energy storage, remember, this business should be bigger than the EV business into the future. So if those margins accelerate, right, into renewable energy, plus they're getting, stipends from the government, I just think the story is still solid here. Yeah, it got extremely oversold. It's the most traded stock in the market. So options are crazy. But when it does get oversold and it does hit support, the shorts cover and it rips higher. The question is, where do you get out? Okay. That's my take on Tesla right now. Assume the war continues, the Fed pauses. What would the market look like if the war will continue? Okay. The war, Asan, I don't think the war really materially, I don't think it's going to stop. I mean, this is don't get too, look at the Russia-Ukraine war. It's still going on. But the market still moved higher, right? The market still moved higher into the war. So it's not necessarily just the war that's the issue. It's uncertainty. So the market just says, okay, you want the war. If the war is going to continue, fine. But we just want to know what it's going to look like. We want to know who's going to be involved. Is Iran going to jump in, right? Are they going to be involved? I don't know. So it's uncertainty that's, really plaguing the market investors right now. As far as when the war goes, the longer the war, the only negative to a longer war could be more defense spending. If we get more defense spending, then we could see yields go higher. So, hey, you want to short the bond market, right? If this is what people are playing on right now. You can short the bond market if yields continue or if the war goes on, because the playbook is the bond market basically barfs bonds or sells U.S. debt bonds if inflation is too high, or if inflation expectations are growing, or if growth is too strong, right? Growth is not too strong. Inflation expectations are coming down, but the more we get the government printing money, the more the bond market sells off and the bond vigilante short. So you can short this, but look at this. Do you really want to short this right now? I still think there's a big move back to the upside, and that's gonna be a huge tailwind for stocks. And I think we get a vicious rally. I know I've been saying it for a while, but we're still oversold. We should see a vicious rally. We're just going into earnings. Earnings are going to be better than expected. GDP is already good. Santa Claus rally. I think we get a vicious. It just takes time. This is why I buy options much further out. Gives me time to look at the market, to take a step back and see where I'm wrong, see where I could be right. The day trading stuff in this environment is crazy. It's day to day, right? Day trading is, if you're that guy, great. I'm not that guy. I don't day trade like that unless we're in a very clear, unless there's a lot of clarity to the market, whether it's going lower or higher. But right now, for every good news, there's bad news. For every, macro variable that is against you, there's a macro variable for you, right? So I'd rather swing it. And when I put all the variables together, I think we're aligning for a rally here. This is overdue. Look at this. You want to short this? Look at the bullish divergence for TLT. This is very bullish divergence. Okay. So I think we're going to get a relief. I'm not saying bonds go higher for the next 6 months, but there's going to be a relief rally at some point. This is your technical divergence, right? Buying pressure is moving up. Buying pressure is picking up. while the price is still falling. You're going to get a relief rally. I think we saw that back here. We called this last time. Hey, it could go lower for sure. But we saw, and remember, this is the biggest downside move in bonds in history. So as soon as you say, oh, okay, I'm going to get short bonds, boom, they go up. So here's what we got last time. Actually, let's use this. You see the bonds moving higher, right? Bonds are moving high. The buying pressure is moving higher, while at the same point, bonds are selling off. And then eventually, wait, was this it? Oh, no, my bad. That was, I drew that wrong. I was looking too long term. This was the sell off right here. Let's use this. This will be easier. Make sure we can see that. This will be easier to see instead of drawing it. Here was the bottom, okay? This was the bottom. I can't even pull it all the way. It's all right. I'll just match it. This was the bullish divergence, okay? Buying pressure stepped up. And then you see price. I'm going to match it exactly. Price was coming down. And then finally you get one bit of good news and the bond market moved up. Now it doesn't look like it made a big move, but this was what, August 21st to August 31st, right? So about 10 days. You got about 10 days of a relief. And then if we go to the bond market, well, this is when this is where rates came down significantly. Not really, they kept going higher. But, bonds rallied and rates came down. Right? Rates came down from the highs. So if we get that again, then from 5%, somewhere around here, we're going to get at least, a little burst in the market. The bonds don't determine the market fully. They just give you, the bond market is going to give you insight into what you might see going forward. Also, look, bearish divergence. Bearish divergence on the yields. Even though the trend might keep going higher. I don't think it goes higher forever. The trend might be going higher, but you're going to get a relief rally is what I'm saying here. Okay? And also, while stocks rallied the whole time, okay, let's overlay the stock market here. This will be easier to see. Stocks can still move higher. This is what people don't believe. Stocks can still move higher while rates move up. Okay? They can still move higher while rates move up. How do we know this? Well, let's just use common sense. Let's turn this white. Okay. What do you see? What do you see here? No, brush. What do you see here? Rates rose, right? Let's go to June. Where was the big upside move for stocks? Stocks broke out right here. I'm not saying we're going to break out right now, but either way, look at rates kind of peaked right here. They came down. I'm looking for a peak in rates. They continued higher, but so did stock market. So did the stock market. So the market can still rise with rates going higher. And then when rates pull back, the market has a bigger burst. The question is, do we get the dollar peak? That's the question. Do we get the dollar peak here? Okay, if we add the dollar on this, where's the dollar at? Let's add the dollar here. Here's the difference. The dollar was falling the whole time. So rates were rising, the dollar fell. That's what we're looking for. We're looking for the dollar to peak out. Well, rates can go up, whatever. The market can go higher because earnings, right? Earnings are better than expected because the Fed paused. If the Fed pauses, if the Fed signals at all, if inflation comes down, right? This is why that data is so important going forward. PCE, core PCE, month over month, year over year. If we do get that and the dollar falls at this level, well, we get the macro forces swinging back into the bulls' favor, right? This is it. This is the setup. This is the setup. And at the same time, economic activity is starting to pick up. That's bullish. That's very bullish. You have a recession in services, maybe a little bit. That's not really a recession. Services are cooling. They're slowing, but manufacturing is picking up. Manufacturing is starting to pick up, right? And that means more liquidity going forward. The Chinese economy. Because if we listen to manufacturing, the U.S. picks up, that means there's going to be more exports. China's economy starts to pick up and everything starts to come back into the grind. So that's kind of my outlook. I know it's a lot of information. I'm building a course to put this all in perspective, but I hope that makes sense here. Put simple, yes, when rates move higher, The stock market can still move higher. Oh, my bad. That's the dollar. Got confused here. Hold on. Okay, there we go. So stocks move higher. Rates also move higher. Okay, great. That's fine. But the dollar was falling here, and the dollar did move up a little bit. So you need the dollar to come down. You need rates to move sideways, and then the market can go higher only if earnings come out better than expected, and if consumer spending keeps up, and if economic growth continues to pick up, and if fiscal policy continues, and if the war doesn't get out of hand and cause oil to spike to 110. Right? Oil goes back to 100. It puts pressure, but it doesn't. It's not going to end everything. Everything doesn't end, right? So on the oil front, you do want oil to ease a little bit for the bulls. And you can go long energy, that's fine. But remember, U.S. is at an all-time high production. Iran, we're easing sanctions on Iran so we can get the oil price down. We're easing sanctions on Venezuela, which might take some time, but it could get traders to capitulate. Saudi Arabia has already promised. The Saudi prince said, hey, we'll make sure that oil doesn't get out of hand. So I'm not so sure oil really spikes unless you get a lot of uncertainty into the market, right? That's my outlook right now on the market. I think when you add everything up, as long as earnings come in better, as long as the Fed, they're going to pause. As long as the Fed gets that pause November 1st, as long as PCE, the Fed's preferred inflation gauge, makes progress, which we need to keep our eye on, right? It's set to come in at 3.7%. Consensus. As long as we get that progress, it's fine. Consumers will keep spending into the year end. And then we worry about in January, February, then we worry about the Santa Claus rally is over. Is growth going to fall apart? Well, manufacturing at that point will pick up. So is employment going to fall apart? That's what you look at next. Where is employment? Right? Average hourly. Here's the other thing. Immigration. There's so many people crossing the border. Look, it's always a trade-off. Yes. Is it dangerous? Yes. But with more immigrants coming into the country, you have to weigh the fact that these who is it that's doing really good right now? It's a lot of the hotels, right? Hotels, lodging away from home. A lot of the industries that immigrants typically work at, right? Those prices come down. Those wage prices come down because they're obviously going to work for a lower price, right? So that also helps with the wage pressures. Immigration is a key factor economically to getting wage pressures to ease off, right? So that's also a positive. Does that come into play? There's so many factors here. I'm not bullish forever. If yields continue to spike, if the war causes the dollar to spike, if oil gets above 100, right? If earnings somehow get, if the Fed starts hiking, like there's all these things that you want to see, and you want to keep track of that going forward. On the positive end, all right? You guys have any questions? I know I'm ranting here. I'm just trying to put it all together. There's a lot of stuff here. It's a lot. Some people say these are the hardest market conditions I've ever seen. Nothing makes any sense. It's not very clear. I just think you have a lot of variables stacking on each other, stacking. Sometimes the stack turns one way and then all of a sudden it flips the other way. And hey, when it comes to crypto, you got one thing. It's the ETF. It is the ETF. And, looking at that ETF news, we're looking at crypto. This is why it's good to have, your long crypto. I know some guys are trading. You're like, I don't really care. I don't hold crypto. But this is always a good asymmetrical bet. And what did we see? I think we saw this. Where is it at? BlackRock? No, not BlackRock. Here it is. I'm going to open this up. Okay, this is basically JP Morgan getting very bullish on crypto. Okay, what are they saying here? Bitcoin ETF could be approved in time for the Christmas Santa Claus rally. I think, are they trying to tell us something? Are they trying to tell us there's going to be a Santa Claus rally? Or is this a sell the rumor, buy the fact? Are they going to sell on it? What are they going to do? Right? So JP Morgan bullish. And I'm pretty sure Morgan Stanley is talking about the same thing here. The Bitcoin ETF. Could that set off an asymmetric bet, for the stock market, for crypto? So yeah, JP Morgan is pretty bullish right now on the ETF getting passed. That brings in a lot of money to markets. And that's it. So yeah, Tesla, I still like Tesla as a good bet. The negatives are, hey, our margin's going to bottom here. That's going to depend on the Fed's path of rate hikes going forward. It's also going to depend on bond yields. Are they going to ease off a little bit? And also that's going to depend on is the Cybertruck going to be a net positive, right? Is it? Well, I think it does. Is the Cybertruck going to have enough demand going forward? There's also a record number of traffic on the website for Tesla. Record number of traffic. I mean, these are all, a lot of this is speculation. Also, full self-driving, right? How close are you to full self-driving? Elon was very negative on the earnings call. A lot of people say we don't want Tesla. Elon is ruining the stock, but there's a lot of buyers that want the stock lower down there. So we're going to see if that base gets built at that level, right? We're going to see if that base actually gets built down there. And then moving over to crypto, right? Here's the other bullish thing for crypto. The biggest, clearinghouse for the U.S., the biggest actual clearinghouse in the world. This is the biggest clearinghouse in the world. What do I mean by clearinghouse? This is a financial institution that's connected to the Fed, who settle transactions, who settle equity transactions, all equities. They settle all U.S. equity transactions. They settle bond treasury transactions. They settle commodities. They settle any type of transaction that's an asset. Okay, what do? They just bought a subsidiary. Well, they just bought a Securency. What is that? It's a blockchain startup. They're doing that because they're building infrastructure for the tokenization of all assets. The whole banking system, right? The whole financial banking system is converting to tokenization. It's converting onto blockchain. That's what they're doing. They're moving it onto a blockchain. And so who benefits the most? I don't know. Some people say XRP. There's an ongoing, of course, Ethereum and Bitcoin are going to benefit from that. But I think it's going to be Chainlink. I believe it's going to be Chainlink because they're already using Chainlink, first of all. And that's the only way they can interoperate with other banks. Chainlink is like a Visa. It's going to take a transaction from every single, quadrillion dollars of transaction. It's going to take a piece of that and move it to the network. The Link token is just a service. It's an asset. It's a service. It's a service that you need for tokenization to really actually work going forward. So that's the good news on that front. And then also, if you look at Chainlink, like right now, Bitcoin dominance is winning, right? It's winning. It's the winner. Bitcoin is moving against all other cryptos. Is there any insight to this? What happens when Bitcoin moves up against other assets? Let's see, last time that we had this big move was October 18th. Let's see, going into this was the bull run too. This was the bull run. First, Bitcoin moves typically, and then the altcoins start to move. But you want to see Bitcoin dominance move up first because that is the biggest. Oh, here's another bullish metric for crypto. Here's another bullish metric. Hopefully, Ehsan, did I answer your question? The other bullish metric is 72%. I don't have to find this, but you can look it up yourself. 72% of Bitcoins are owned by long-term hodlers. So really, the supply is very low, and it's going lower. And so when you get the Bitcoin ETF, if it does come anytime soon, right, November, December, January, that's going to be a huge misplacement between supply and demand. Demand is going to extremely overrun supply, and the price is going to explode. You have also a lot of interest in Ethereum. Now, moving to Chainlink again, the bigger the let's get rid of these. The bigger the base, the bigger the breakout. Okay, the bigger the base, the bigger the breakout. I don't think there is a consolidation in the crypto market that looks like this. If you find one, let me know. But this has been consolidating sideways for a year and a half. It's about a year and a half, right? About 18 months, sideways consolidation. And so the measured move is, no, I'm just kidding. I don't know what the measured move is. Everybody says that, but who cares? It's just technicals. I don't know what the measured move is. Maybe you use Fibonacci. You could probably use the Fibonacci retracement. And from the previous high, actually, no, let's just use the highs here, right? So that first move could take you to 12. right? Depends, 12, 15, somewhere around there. We'll see. I mean, it has a lot of adoption. And the key here too, Link versus Bitcoin, you want to see this breakout. It is moving against Bitcoin. Once it starts breaking out against Bitcoin, like it did back here, it's going to moonshot. Link versus Ethereum, it's a little stronger against Ethereum, right? Link XRP, still moving against XRP, even though XRP got the boost from the SEC. All right, so we'll see how that plays out also. Yeah, hopefully the war doesn't escalate too fast. The weekends, as long as there's a lot of uncertainty, the weekends are probably going to be sell off. Fridays are going to be a sell off, because the war escalation. But don't get too crazy on the war. Like we saw, history shows. Where's that chart at? History shows that typically an invasion, for the most part, it's like 80%. Invasions are bullish for the market. Invasions are bullish for the market. Let me see if I can find it. I know I put it in here somewhere. Oh, here it is. Right? So this is another thing to keep in mind. Yeah, there's a lot of uncertainty. I get it. And not that you shouldn't be uncertainty, but where does the market end up, right? Over time, it ends up higher. It does end up higher. Bro, come on. There it is. So what do we see on average? The Vietnam War, going back to 64. Yes, it was a buy the dip moment. The market kept going higher. There's uncertainty and then it moves up. How about the Gulf War? Market exploded, you know. Afghanistan War, the Afghan War. This was basically 9/11. Now, the reason why this didn't last, it did go higher, but we got we also had a crash, an overall market crash because of extreme exuberance. What was the other reason that caused this crash? I remember thinking about it. I think it was the budget, the federal budget ended up. I think the military lost like $1 trillion, something like that. Markets were at all-time highs before this. I don't know. I'm trying to think of what is the reason this didn't go higher. I think economic activity was moving negative at this point. Yeah, the business cycle was actually turning down. So that's always a negative. If you get the business cycle moving down, that's always a negative. You can look at ISM, and these are basically supply chain managers telling you what they see going forward. So it's forward-looking GDP. So if they're saying, hey, things are getting worse, and you have an invasion, and you have a crisis, and stocks are coming from all-time highs, then yeah, you're probably going to go lower. So right now, economic activity is still positive and moving up. The Iraq War, 2003. This is kind of the same. I mean, it's kind of similar. You had the invasion of Iraq, went higher. Crimea went higher. So where does this one go? Where does this one fit? And also, where are rates at? We're at the top. The rate cycle is done. So if anything, any kind of chaos, the Fed can cut rates if it happens. The Fed can pause. They can cut rates, let the bond market do the work, right? And while growth is expanding, while the manufacturing sector picks up because we're building new rockets, new manufacturing, blah, blah, blah. Oh, inflation is going to go higher. Well, no, that doesn't make it. As long as production and productivity is up, inflation doesn't move higher. And we're moving into an era of robotics, of 3D printing. I'm not saying that happens today, but we saw, productivity is moving up. Per hour worked, there's more goods and services being produced. More people are coming into the labor market. So again, I'm going to edge on the side that the market continues to move up. That's my take on it. Been in here 58 minutes. Any other questions that you guys have? I think I'm going to finish off there. And unless you have any very specific questions, or you want me to look at some levels. I know there's a small little delay. Oh wait, no, that's not Meta. Okay, yeah, cool. Hey, nice to see you guys. I want to see Tesla bounce here. Actually, did you have some? I think you had some charts, huh? Oh, I think those are from yesterday. Um, you said I want to see, okay, to car buys. I want to see Tesla bounce here, but if it does, it will be building a bearish pattern for the long term. Price projection, if it breaks out 340, downside 124. Fair enough. Fair enough. I think we get a bounce and then it's like, hey, if we cannot hold the bounce, right? At 245, shoot, I don't mind turning around and shorting Tesla at the gap. I really don't mind. The question is, where is the Cybertruck launch when we get close to this gap? Or where are we when the Cybertruck launches? Where are we? Because the UAW strikes also, right? We're gonna see the other automakers start to capitulate a little bit. There's a lot of stuff coming online. Do margins, if the Fed does pause, what does that do? Do investors come back into Tesla stock and get crazy because the Fed paused? Okay, no more rate hikes, at least for the next couple months. Do they introduce the $25,000 car that won't be produced till 2025? Is that a catalyst? So there's a lot of questions there. On the downside, if we go and fill this gap and then the truck is released and it's a sell the news event, shoot, yeah, it probably comes lower again. Probably does come lower. But I would say this, if the Qs continue higher, I don't see Tesla really making any new lows at all. The overall market is very important for these stocks going forward, along with the macro and the 10-year yield. So that's what I would say when it comes to that. Other than that, hey, you guys stay blessed this weekend. Make sure you guys have a good time if you can afford to. If you got to work, make sure you work. Stay focused. Get your workout in. Get your diet straight. Stay positive, but not so positive you're lying to yourself. Make sure you criticize yourself if you're doing something you shouldn't be doing. Right? Stay blessed this weekend. Stay safe. Don't do nothing dumb. Um, and tomorrow, for the newsletter, I'm gonna start changing the times of the newsletter. I'm gonna probably do it twice a month, or maybe even once a month. I'm trying to decide that. Also, I'm gonna start doing some. We're gonna start doing some processing or analyzing other analysts on here. Maybe on Saturday. So Tom Lee spoke for about an hour. He's bullish on the market. So I think I'm gonna look at Tom Lee tomorrow. We're gonna revisit Tom Lee and just kind of go through what he's saying. And market, there's a lot of terminology that's hard to understand, a lot of concepts that are confusing for new investors, and I'm going to break that down for you. So hopefully we get that in tomorrow. If not, it'll be ready on Sunday. Anyways, you guys have a good weekend. Stay blessed. Thank you again. Appreciate you guys as always.